guys. Here, get a little better light in here. So you can get a little reflection off my bald head. I don't have my hat, so we're rocking no hat. But um, first off, guys, happy Friday. You made it through the week. If you're net green, awesome job. If you're not, use it as a learning experience. Right, go back, figure out where you messed up, what you missed, whether it's on your entries, on your exits. Cover what we've talked about. Right. The good news is everything that we do here, if you're watching it on TikTok, it's recorded. And so when you go into botjock.com, right, and then you click on your account and you scroll down here, you're going to see it says community events. This is a direct feed directly from YouTube. So you can see even today, September 8th, we're actually watching this right now. So if I were to click this, it literally would go into what I'm doing right now. And so it records it. So you can watch it directly on YouTube as well, but just always remember that you can go back, right? This is why I do it like this, because there's so many people that say, oh, you said it was up and down and went up and you said you were right. I like to record it. Keep me honest, right? I mean, if I'm right, I'm right. If I'm wrong, I'm wrong. You can't hide it when it's on YouTube and it's recorded. So that's why we do it like that. So if you're, struggling, if you missed a couple of the huddles and you wanted to kind of see what you missed, go back and watch them. That's why we record them. So let's take a look at our day yesterday. And then we will talk about where I think we're going today. So I want to start off by muting these two here. Gap Fill Sniper and Harmonic Tracker Pro are two of my favorite indicators. They are a little noisy when they're on top of everything else, right? So we'll mute those just so we can see the EMAs with the trend lines and such. So let's talk a little bit about our day yesterday. So as you all know, we like to trade on the 2-minute. I'm going to move this to regular hours so we can actually go to the open. All right, so this is Thursday. Here we go. All right. So if you notice on Wednesday open, one of the things I'll show you, if you take the Harmonic Tracker Pro, you can see that it had that short call. The thing about the open on here, though, what we were really watching is you had your touch, we had support, we had our touch, we had our support, we had our touch, we had our support. So it's kind of our triple bottom, right? Once we pumped up, a little bit, and then we broke above this 443.94, which you can see I had this line already marked. It worked out perfect, right? You can see in this area here, we did not quite make it, rejected. It did triple touch. It exploded through this line, came down for its retest, tried to break this next line of resistance, couldn't do it, tried again. Struggled a little bit as it came up to the 200 EMA, which is what we talked about in the room. Came down for the retest of support here, which gave a lot of volume of support, right? Which was a nice easy scalp read. And then we just kind of slowly creating the higher lows, higher highs, right? And then we did collapse back down. We do have a higher low here. And then you can kind of see that we did come up and create another higher high, higher low on the market. So it was a little bit of sideways trading, but this was great scalping. Truth be told, I was swamped yesterday with meetings, so I had only taken 2 trades. So I did not take this first pump. On this second pump, I did place a quick scalp, which stopped me out quickly. And then on this one right here, when I saw this bullish candle, the moment I saw this volume come in, I did jump in a little bit later here. So I jumped in around there, came up, and then I stopped out right there. I did not take anything else in here. You can see, let's take a look. So our Harmonic Tracker Pro did kind of call the long there. We really just traded sideways for the most part. And you can see this is not the best time to do it. We still scalp so that you can make a lot of money in this. But, if you look at it, I mean, even the harmonics, you can see it called the bearish harmonic, went down, called the bullish, went up, the bearish, and then the bullish, right? So the harmonics did really well. I'm not a fan when they're really tight like this and they're really bearish and really bullish at the same time. I typically would like to go to a higher time frame and see what that looks like from there. So, all right, so let's talk about today. So if you really zoom out here, right, we had our fall. We were trying to create a little inverse head and shoulder here. It couldn't cracked that neckline, it collapsed. We did try to do a triple bottom here, which did end up breaking above, and we did find some support, which pushed us here. And now, if you look at the pre, we'll extend that as well, but we are above that 200 on the 2 minutes. So let's take a look at that. What is that app, Sabina? This is TradingView. This is our charting tool that we use to kind of identify trends, and we have custom indicators and stuff. You can check it out if you want to go to botjock.com. So this is a 30-minute huddle that we do about the market. So just kind of continuing on here. So we have, I wanted to actually, I had someone ask me this in the room because it seemed to confuse them on why the 200 will change if I do extended hours or if I do regular hours. Notice how it's very different. You want to look at both, guys, because although extended hours is not available for you to trade, it is still a price action. It's still moving, right? And so this is an average of the price action. So if you do regular hours, right, you're cutting out a ton of price that it's not able to pick up. But both of them act as resistance or support. See, we're on regular hours, and you can see that, I mean, that's killer resistance. So you can play both of them. It's okay. But it also makes sense as to why. I'll give you an example. You may let's find a good example here. So I may take this and do some charting and say, okay, here's my trend line. 2 peaks right there. Then you go, well, let me go to regular hours. And now you're like, why do I have this rogue one? And I've actually done it myself sometimes, right? A while back, where I'm sitting there going, why would I put a line like randomly here? It makes no sense, right? And sometimes it doesn't dawn on me that, oh, well, that's right, I charted that one on the extended hours. So just to kind of explain what that difference is. And they're both very viable. I don't want you to only use one or only use the other. So let's talk about why we're pumping here, right? And again, guys, I haven't even looked at the news, any of that. I'm just strictly going off of the technicals of it. So if you think about this, right, on our regular trading hours, we had our triple bottom, or if you go to a larger time frame, right, it's just likely a nice double bottom. We retested, we trended up, so that's confirming a reverse. We did get that higher high. We did drop down for another retest, which now we have a double bottom. So the classic move of a double bottom, the first move is typically to reclaim this side. So we have our bottom, we have our second bottom, right? We broke the neckline, you see the volume picked up, now we've reclaimed that side. So I get a lot of questions where people say, well, man, I'm instantly negative because I entered that double bottom. And so I'll ask where they entered, and they entered here. Keep in mind, the better, aside from news, right? If there's no news, if it's just a strictly a double bottom, you're going to typically see something like this, where it goes up, it reclaims this side, and then you're going to see a pullback, a retest, something like that, right? And what it's doing is it's retesting this neckline, it's retesting some of the EMAs or SMAs, is likely what it ends up doing, right? And then this retest, although it seems annoying if it goes backwards like that, you don't want to enter it up here. You want to enter either the double bottom. In anticipation, you want to enter it on your bullish confirmation here to ride it up, and then you set a stop loss, below it, because obviously if it crashes, right, then it's invalidating that double bottom. But if you miss this, you don't want to enter it here trying to ride the train, because you've already missed that train. Now, there's a chance that it could just take off and go. Normally, that's news that's going to push that past that. It's not going to do it just through technicals. So the classic technical move is you're going to have your down, your up, your retest. Now, the way I play these is I will take my long here or my call, and I'll ride it up, right? And then I'll have a trailing stop. So that way, if it pumps, I just ride the pump. If it comes back, I usually get stopped out about here. Then what I'm doing is I'm waiting for that pullback retest, and then I want to see a confirmation push north like this, right? Then I may not even enter right away on that, depending on the volume that's coming in. I may wait for one more retest, creating like another little mini double bottom off the neckline. And that one right there, once it breaks the neckline like this, it goes like that, that's what typically causes it to just absolutely explode, right? Now, it's important in options contracts because if you enter too early, so let's say I enter here, you may say, oh, well, it's a double bottom, it's going to go up anyways, but you're burning all this time. So you're losing money as you're in that contract. You want to actually allow this to play out, and you want to catch it as close as you can to capture that profit. And that's the thing in our room that we do in our community is we scalp. We want to get in, we want to get out. I don't like trades lasting any longer than between 5 and 20 minutes. I want to be out. All right, anything longer than that, I typically get annoyed with it because I gotta study where I miss it, because I obviously took a chance and I missed that entry, and I gotta work my way out of it now, right? Because you don't want to let them burn. Now, the only time I will let them burn is if I take a 7, 10, 14 day contract. Then I don't mind, because you got some time, right? But if you're doing like how we are, where you're taking 1, 2, 3 day contracts, I mean, you want to get in, you want to get out. That's the goal, right? So I hope that helps you kind of play that pattern. And I hope, I was doing this exercise not only to show you the pattern plays, but also because it's potentially what can happen today, right? And so you can see we're already starting to pull back. So how would I play this today? Well, how I would play it is I would be very cautious in my puts. First of all, because you have that possible reversal, right? You got those higher highs, higher lows. It's kind of weak. It's not super strong, right? But it's coming up with a higher low here into another potential bullish pattern. And so that makes it, kind of adds some strength to it. But the caveat to that is don't lose sight of the fact that we are overbought. So that could be that pullback resell, and you can see we're pulling back as it is going right now. So now this is the 2 minute, right? This is what I scalp on. So what I want to do is I want to move to the 5 minute, and I'm going to look out and say, oh, is there something else I'm missing? Potentially, right? You could have this little kind of shoulder, your head, and this could act as a little shoulder, right? So if you think about this could almost be a neckline, right? Somewhere in here. And if you take it down from armpit to armpit, right? Like this, we've already broken that. So that retest, not only on the potential double bottom, could be a larger inverse head and shoulder, right? Which could cause an explosion, because just like the double bottom, if this pattern plays out, the reclaim is this side, right? So that could push us all the way up to, 447, 448. So that's how you're gonna, analyze the patterns. Like this line, I may leave that line, right? Let's see what it does. So now we'll go to the 15 minute. Also, I want to touch on one thing. And I'm going to do some TA on these guys, but I want to show some of these exercises because I get a lot of these questions. If you look at this and you go, man, I don't see like an inverse head and shoulder. Like I don't see it, right? I used to look at these things and go, well, this shoulder's kind of too far. This one's kind of funky looking. I mean, it's really not that. Well, maybe what you're doing is you're looking at the wrong time frame, right? So when you see this double bottom, if you go to a higher time frame, you may not see that, right? And so you can still see the double bottom. So let's go to the 30 minute, right? Still have a double touch, but see how it's beginning to look more like the pattern as you go up into a higher time frame. And then you go to the 1 hour, right? Now it almost looks like an actual potential shoulder, right? And so you might just be on the wrong time frame. Now, it doesn't mean that this is going to just break up to the moon. There's things you have to look at, such as we have the 1 hour 200 EMA. So the 1 hour 200 EMA is 446.13. So what does that mean? For me, it means if we get a pump, it's likely going to reject off of that once, right? Come back down, come up, try again. Now, if it tries again and it rejects again into some kind of double top, right? Now you might get into where it was more of a pattern trap move. And so for me to take a call today, you would have wanted to take it down here. If you didn't take the call down there, what you want to do is you want to wait until on the 1 hour we get above this 200 EMA. You want to let this pump to like 446.55, maybe have a retest, right? And then you'd have your continuation because it's going to claim this side of it. So I would, on a continuation call, and I'm going through this, we'll try to remember these numbers. I want to not take a continuation call till we get to about 446.30 or so. So you can always flip back to your chart. This was the trade the live trader took yesterday. So you could always go back to your chart, and so you can see we already have 446.38 actually right here. And so we can just go ahead and move this, and I'm just gonna mark it right there, just so that way I know where I'm gonna take my continuation call. And then I'm gonna come back here and say, okay, so now I have my continuation call. Where do I want to take my put? Well, I want to take my put off of a rejection right here, potentially, right? So we're gonna want to say 446. I'd say 446 even could be a good potential rejection put that you could take. Now, it's a little riskier because you could be by then in a bullish pattern that could pop, right? But that's why we have that continuation call as well, to kind of help protect that. And so we know that we want to do I'm just showing you different ideas on how you can mark it to help yourself remember. So we'll say like the orange is our puts. So we know this is a continuation. This is going to be our put. I'll go back to my chart. I'm just going to take this off for now. So now we want to look, okay, well, where do we want to take a call for it to get a bounce? Well, it's already bounced one time here. It reclaimed this pretty quick, and it bounced again here. So if we get anywhere, I'd say, 444, I'd say anywhere around 444, thinking between 20 and 30. Let's say 444.20. I don't want to go too aggressive on Fridays. 444.20. So let's put a line here. And I know that I'm gonna do actually I don't want to do yellow because I do yellow for all my other stuff. So we'll say teal for my calls. This is a good way to chart it and to go back and be able to set your alerts really easily. If you're confused on what I'm doing on TikTok, we do automated trading as well, which I'll get to here shortly. And I will do an NVIDIA and all the other TA. Just give me one moment on this exercise. So now we want a continuation put. So we know that this has been a heavy support. So even if we break this at 443, I'd say 443.60, right? There's a likelihood we're going to come down to this area here, which is plenty for profit. So I'm going to do a tight put of 443.60 for my continuation. So now to explain this one last part, and then I'll jump into the other TAs. The reason why I want to box in my upper and my lower. If it falls and it comes back up, it's going to take this call. If it pumps and it rejects, it's going to take this put. I set these continuation ones because those are my breakout areas. If I break this area, and let's say by chance I get a terrible candle that throws me in a trade here. If it just breaks, it's not going to take the put. But if it comes up and rejects and then takes off, it'll open that put. But it's also going to protect me by opening that call. And it's going to take some profit on that call, which is going to help offset that put, which is why we do that. So now we have our range. It's going to be easy to set up the ATA portion, right? So I'm going to jump straight into this, and then we'll finish it with the TA of the other ones. So I'm going to delete my alerts from yesterday. The beauty of the ATA, guys, is I just set it to take one trade, and then I analyze it. And we were talking to people in the room. I mean, they're getting 1, 2, maybe 3 trades a day, but they're not losing, so their account's going up really, really consistently. So, which is the goal. So now it's easy. Now that I've already marked it, it's easy for me to know which ones I want to do, right? So for my contract days, I'm going to set that at 3. But I don't want anything carrying over the weekend. I don't do it on Fridays, guys. So I have a mark here, stop end of day at 3:45. Profit or not, it's just going to kill it. I also don't like to trade very long on Fridays. So I'm going to give it till about 1 o'clock to hit my marks. And if it doesn't hit it, I don't trade. That's okay. The reason why is because after 1 o'clock, the goal is to trap people, right? They're trying to move to trap people into the market. I I hadn't looked at the QQQ, but the SPY, we're in a retrace now, but it's definitely in a bullish pattern. But they're going to try to run some trap moves to get people locked in for the weekend. So that's why I don't like to push that. So, all right, so we can set this up quickly. We know this was our mark, 444.20. So 444.20. So that's telling it if it gets to that mark, it's going to take that trade. So we're not DCAing. I'm not going to stop loss because I'm just going to stop loss it at the end of the day. So whatever I'm in, if it's still in a trade, it'll just kill it. All right, so we're going to set that one. So now we can do this a little bit quicker. I like to open my alerts because it'll show you when it actually creates the alert. Otherwise, if you don't have this open, sometimes it may not create it, right? See how it took a little bit on the first one? Sometimes it does that. So the second one, this is the way I have my chart set up, is my continuation, which we know is 446.30. So I'm going to show you how quickly you can do this. You just change that, change the date. We change this to 1 p.m. We have it stopping at the end of the day. Now where this is going to stop is this number right here, not this number. We had to do a range, but it's this number. So that's the front one's the one that you want to do for that. We did three days. Everything else looks good, and that's it. That's how quick you can do it. Once you get the hang of this, guys, you can set this thing up in like 5 minutes. It's really not that bad. So let's set up this one. And then we know we're going to do the put at 446. 446. 8. 3. We're going to stop it at the end of the day. If you are watching on TikTok and you're confused as to what I'm even doing, we actually teach you on all this. So it is part of our training. So we're doing options trading. Let's take a look again. 3, put 1, 345, stop. We got the closeout candle right, and 446, yep. Always double check your settings. You want to double check the settings before you set the alert too, because whenever you set the alert, that's what it is. So this is the trading zone. I don't want it to trade past 1 o'clock. I'm going to have it stop it at the end of the day. We're going to make that be 8. And then this is our continuation put, which we have 443.60. My purpose of this exercise today, guys, is to show you that there's more ways to do it by, if it makes it easier for you. You don't have to just do it exactly the way I do it. There's lots of ways you can trade this this indicator even. So we are set. Okay, so our ATA portion is done. So I'm going to spend the rest of the time here just going through some of the TA. If you missed the SPY, I already kind of did the SPY. We're in a nutshell, we're going to watch the range between 443.92 and 446.16. So that's going to be likely where we're going to bounce today. We are in a potentially bullish pattern, depending if we can actually break this neckline and this EMA, 200 EMA in the 1 hour. If we can break it today, we're going to reclaim this. However, there is a chance, obviously, that we can pump up, reject off this, and then they'll trap people into the calls and then dump it on them. So just be really careful as you approach that. So I'm going to jump straight to an NVIDIA. Hopefully you're still on. Today's exercise took a little longer than planned, but it was important. I know people are in trades, so they're stressing about good old NVIDIA. So you can see on NVIDIA, yesterday we opened here somewhere around 457. We pumped up to about 464, and then we dropped a little bit. Again, I don't see a breakout on NVIDIA quite yet, only because no, what I mean by breakout is an actual real big push like these, right? So if you look at NVIDIA, you can see we talked about yesterday that we were extremely oversold, right? And that as oversold as we were, it doesn't shock me if we don't start heading up a little bit. Now, on the 1 hour, you are above the 21 SMA with a bullish candle. If you get one more bullish candle above that 21 SMA, we're almost certainly going back to 471. It's just going to go. You can see we had heavy support here, and a great candle wick with heavy support here. So if this higher low does create, it would not shock me if we don't push up to that 171. The real big breakout is if we can flip this 200 EMA with enough volume to break this trend line, right? So this trend line is just right here, just kind of our downtrend line. We kind of bypassed this one here. So what you could do on NVIDIA is you could take almost like a double like that. And if we were to break this, I mean, you're almost clear to let it roll all the way to there, because that's going to be the next potential stop. And if it breaks that, I mean, it's coming all the way back to 500. So nothing's showing that it's going straight there yet, unless some news comes out to support that. But we are in a heavy support area per our indicator. We are green on the Divergence Hunter. So I would suspect that we'll probably have an early move north. Now there's room to fall south based on this trend line that we had here. This one was, if you zoom back, yeah, so we did it based on this one right here, and then we covered that and we covered that. So some really great bounces off of that. So if we do actually fall down over time down to 450 range or so, I'll be super careful on your puts in that. So that's how I'd box that in. Is there any other requests real quick? Otherwise, I'm just gonna skim through them because I only got about 30 minutes. I try to keep it 30 minutes, but I don't mind going a little more. Also, the TikTok, I can go a little longer if I need to for you guys. AMD. Let's take a look at AMD. I don't actually have AMD on my charts. I did do AMD for a while, and then I stopped charting it because I didn't get a lot of requests for it. So I typically start with the 1 hour. Let's pull up the two indicators with the EMAs. So you can see we were oversold a little bit. It's kind of climbing up, but it still hasn't flipped green. So I don't see that green yet. The biggest thing that stands out to me right away is you can see there's definitely a resistance right here that it has to break, but it is actually squeezing it because I would box it in something like that, right? So if you break this level here, 105, 105.50, right, then you're likely going to fall. And the reason why also is because not only would you break this trend line, but you have your death cross, right? And you're below the 21 on the 1 hour. So if it stays below the 21 and it keeps squeezing like this, it's gonna drop. At least I would say back down to 104, probably 102. The other thing that stands out, we teach in our room early pattern recognition. And you can see here, right, you have your shoulder, your head. There's that chance that you can create another shoulder and then have a collapse like that, which would reclaim this side here. So keep an eye on that too. That's stuff that stands out to me pretty quickly. So if I were to watch the pump, I would say 107.65 or so. I'd want to break it in order for me to take a call. Otherwise, you're gonna potentially be in a bearish pattern and below the 21 and the 200. So I would, as long as I stay below here, I'm taking only puts. I'd want to let this little kind of double support here break above 107.36, and then you should be clear to take some calls in there. But you want to see some strength. I personally, I don't like taking the call. I don't like saying take the calls above 107.36 only. What I mean by that is let it break, take a retest, and then take the call, right? Because otherwise you might end up a situation here where it pumps and then, oh, I entered the call, and then it just dumps on you, right? So you want to always have that retest of support, and that's where you want to join. You don't typically want to join a call on these big candles, right? Yes, you're gonna have times that you'll be like, but man, I joined it right here, and look, I made so much money. Yeah, but there's a lot of times that's not gonna be the case. Like, let's say right here, right? Boom, boom. Oh man, I joined it right here. Now you just got wrecked. Congratulations. So you always want to, if you're joining a call, you want to anticipate the pullback, join on the pullback. If you're joining a put, you want to anticipate a push north, and then you join on the push more north rejection. So just some tips on that. Tesla, yeah, I usually do Tesla. I think, which ones did I change? Meta. I think this was Meta. Okay. Let's see. Tesla. Let's mute that one. I like the Bollinger and the Zone Tracker because that's where it has my EMAs. Tesla's just range. It's just consolidating. You can see right here our support that we've had 242 for some time. That was based off of support here, support here, support here, resistance here, support here. So that's been our really strong support. And then you look at our downtrend line that has played out really well too. That is from this peak and this peak, and it just kind of rides down. So we're kind of in a squeeze, I think, within Tesla. That's what pops out to me right now, because you have the higher lows, but you have the lower highs, right? So it's just kind of creating that squeeze. So we could continue to range for a little bit with Tesla. For a breakout, I'd want to see it bust above this trend line here, or I'd want to see it reject below here. So when we say breakout, I'm going to touch on this more of a training exercise part of it, since I'm still recording for the community. So when I say breakout, what I'm really looking for is, so like it's right here. I want to see a push north. Then I want to see a pullback, like we talked about, right? Create a higher low of some sort, like maybe off of this 200 EMA in the 1 hour. Then I want to see it's gain some support, a higher low here, creating some kind of double bottom, something to show we have high good support. Then I want to see it pump up here again. Then I want to see another higher low. Then see how we're starting to slowly oscillate into the breakout, and we're not even coming down into this range. That tells me that we're hanging out up here, and it's likely to break north. And so then you're going to have a push, you're going to have a breakout like this. You want to be careful trading this, because this is a trap move sometimes where they'll break it out and then they dump it. So what you want to do is you let it break out, you have it pull back, right? And then once it retests this and you get some good support confirmation, you want to enter here and you set a stop loss down here. And then that way, this is where the true breakout comes, because now you have the breakout, you have the retest, and then the explosion. So that's what you want to, that's how you want to play the Tesla, right? Otherwise, it could be the other way, right? You could come up here, reject down here, break below the 200, reject off the 200, come down here. Then you can have a lower high, lower low, kind of in a descending triangle like this. Then it pushes it through, retests, rejects, try to gain support again, and then that's going to do that. So typically, as you get into these squeezes, the breakout's going to be the direction that that it's leaning towards, if that makes sense. So, but other than that, we're just kind of in a range. We're in like a squeeze. I mean, you can see the RSI is just right in the middle. I mean, it's green, so it says we have some room to go up, but right smack in the middle. Let me see what the harmonic says on it. So the harmonic got the short, but it has not called the long. It got the long and the short here, got the long there, but it has not called the long yet. So not quite there. That's on extended hours. Let's try regular hours. Sometimes regular hours will call it a little bit different. Yeah, so you're still... Actually, this one never even called the short on regular hours. It still has you in a long. Right, so that was an awesome call. The regular hours seems to be a little more accurate because it doesn't get faked out in the aftermarkets, but look at that short. These indicators kill it. So the harmonic one, I do like it mostly on the regular hours, but I do check both just to check for confirmation, because it can change it. Let's see. So, but that's kind of how I would play Tesla, guys. Tesla's got room to go. Let's zoom out and look. You know, at the overall grand scheme of things, right, you still kind of have that like roundedness. It's a little high for me for a handle, so I don't know that it's inverted cup and handle or anything like that, but until we break this trend line, right, we're in the upper range, so there's that chance we can collapse back down to 224. But this is a good medium line, 240, 258. If you're below that, I would be really careful taking your calls until you get to about 225, 230. But if you're above it, you know, wait for the support and then take your calls. But I'm going to go ahead and end the room here for the community. TikTok, I can give it a few more minutes if you guys need it. But I'll see you guys in the room trading. Again, I want to caution you guys before I stop it. I don't trade a lot on Friday. The only thing that I will trade on Friday is going to be my live trader, the automation. I don't trade a lot on Friday. And the reason why is because you don't want to take a 0 day. You want to take longer than the weekend for your contract days, obviously. but I don't like trades hanging out over the weekend. Yeah, it's kind of nice, John, right? I don't like trades hanging out over the weekend. The only way I'll let a trade, if I see a just a clear opportunity for a move that is going to just parabolic us north or down, I'll do a 14-day type contract, 10-day type contract, and then I don't care if it goes over the weekend, right? Because I want to get that early entry. But if you're doing anything less than 7, I would not let that thing go over the weekend. You're just going to get destroyed by the time your stuff opens up on Monday. So, but that's all I got, guys. I'll see you in the room again. I'm going to open up the room again, for a little bit this morning, mostly for education, training, questions, live trader, stuff like that. But I'm not sure I'll do very many trades outside the live trader today. So, but I appreciate you guys' time, and we'll see you in the room.